Good afternoon, folks. It's Bob Kendall here. Just going to let the stream fill up a little bit more before we get started. So we'll start in probably about 2 minutes. I'd like to see we get at least above 50. We're about 30 right now. So a lot to talk about. You can see the screen that we're looking at. Futures are trading near the highs, actually just made new highs as I'm speaking. Well, we're going to go through just a couple cleanups just to talk about what we're going to do today. I'm going to do some opening comments for probably about 10, 15 minutes. Just want to set the tone for what we're going to be talking about today, and then I'll just open it up for Q&A, and hopefully I'll have some folks that will be telling me reading the line for me here. So it's kind of hard to concentrate on answers and read questions and all that. So I've got some folks on here that's watching um, to give me some comments. So give us about a minute, and we'll kick this thing off and see what's going on. Okay, folks, we're going to get started here. Appreciate you taking the time out to hang out with me. I'm going to keep doing these things. Hopefully we get some good traction. I really appreciate it. It's only been about 7 weeks since I really opened up my daily commentary to the public, and we've had some great response. I'm really happy about what's going on. I think we hit over 2,000 subscribers. I know it's not a big deal, but you know, it's nice to see those kind of folks paying attention. And I really want to um, thank everybody for all the comments, good and bad. Okay, I'm a big boy. I traded on the floors for years, and if you don't want to be criticized, you want to see criticism. If you have, all you have to do is go hang out on an old school trading floor when you're yelling and screaming at people trying to make a living. It's a different kind of world we live in now. We all live behind our social media and behind our little boxes here, especially today as we see society actually, I don't know what we'll call it, contracting at some stage where we're all, the economy shut down and everything that's going on. Just a couple fundamental comments that I want to make. You know, we've been watching all of the news, and now they're starting to open up the economy a little bit, but it's kind of a joke. If you watched last night's broadcast, I pointed out that I found some footage of a guy flying over a parking lot with all the airplanes, and that's just an image that what we're seeing. It kind of brings into perspective of how shut down things are, and it to me is just mind-boggling. You know, the markets remain, you know, stable, but if it weren't for the Fed, we all know this. If it wasn't for the Fed right now, we wouldn't be seeing anything. This market wouldn't be here. So let's take a contrast for a minute. Let's think about what happened in crude oil in the last few days. Why did that happen in crude oil? Because guess what? The Fed's not buying crude oil. They're not supporting crude oil. If the Fed was not in the market, all the markets would probably look similar to crude. And you know, that's an interesting perspective. So you know, the old saying, "Don't fight the Fed." The Fed's definitely got a backdrop, and why I'm trying to look up. I'm trying to look up some a story that I got, somebody sent to me an email, and now while I'm looking at this, I'll just kind of continue to talk through this. But this economy is destroyed. Okay, there's nothing good going on. Hopefully they can get this thing back on track, and just to see how what kind of traction we can get. I keep talking about this May number, just a little more, some thoughts on the fundamentals, is, you know, May is going to be the first time that you're going to see in the rearview mirror what the carnage looks like. That video I put on last night with the airplane parking lot with Southwest jets and Delta and all these jets just perfectly parked in a field. There were 747s parked in the grass. I mean, you know, that if that doesn't tell you what's going on, nothing will. And you know, I mentioned that, you know, there's just so many things in this economy that are shut down, and so many things that you shut down you can't just turn on. My biggest concern, looking at those airplanes, those things have been sitting idle for all this time. What's it going to be like when they turn them on? What's the maintenance cost? What's everything it's going to take? And the headline slash clickbait on the video last night was, will they survive? Some will and some won't. And there's going to be a lot of that in this economy. There's going to be people that are going to survive, and there's going to be people that, companies that won't survive. There's a lot of small businesses that won't come back. There was a very sad comment on one of the videos that I did, I think last week or so, and the last several times. And some guy had a small manufacturing company. He doesn't think he's going to open up. I think after 20 years. I mean, this is the kind of stuff that happens when you shut down the income in the economy and you tell everybody they've got to stay in the house. And so the results of all this is going to be catastrophic. The Fed does have a backstop, but at some stage, we used to have a saying on the trading floor, it works until it doesn't. And right now, it will work. The Fed support will work. But the realities are is that it'll only work as long as we believe it'll work. If the bond vigilantes, I keep keeping you guys to look at, keep a track. I know it doesn't sound like much. If rates go to 1%, somebody made a comment all the way to 1%. Well, that's a double in where rates are right now. So that's pretty substantial. And, you know, that is, you know, once they get to 1, that's going to be the trigger point that's going to tell us there's something worse going on. I still have concerns about the bond market. I have a lot of concerns about the infrastructure. And I think I just found this story. You know, it has to do with the MBS market. Some of you may have seen the Fannie Mae put out that they're going on this forbearance. They're going to take the service. You folks may not be aware of it, but servicers, if you don't make your mortgage payment, the people that service that loan are still on the hook to pay those payments to the bondholder, whether it be Fannie Mae or a bank or whoever's holding that paper. They're still liable to do that. Well, I saw a comment from some of the markets in MBS this morning. The Fed came in and was buying. As soon as they stepped out of the market started declining again, because without their support, nothing is, we're in big trouble. So good news is we have their support. The bad news is we need an economy, we need cash flow, we need the economy turned on. And I've been talking about this whole idea that we've got to get the economy on by April 15th. Well, it's the 22nd, and we're just now starting to get some things to turn on, and it's a joke. I mean, even just there's crazy stuff going on out there. All I can tell you is what we're seeing out there. It's got to change, and it's got to change quickly. We got to get the country back online. And I think the risk of the coronavirus have subsided. I know there's a lot of people that have died. That's really sad. But the coronavirus has actually not killed as many people. Last year, I think, was 63,000 on H1N1, which is swine flu. So these flus are always dangerous. I just, I'm not here. I'm just telling you, I think it was a bad decision to shut down the economy totally. I think there were other ways to go about protecting this, but we have to deal with this thing now. And there's just so many industries that are being destroyed and that get turned on. So let's go. Let's turn over. I've got the futures live chart on here. Right as we were starting the show, the futures printed a new high for a second. There's still liquidity. I have to tell you, folks, liquidity is way better than it was 3 weeks ago. And even last week when I did the live cast, we're looking a lot better. The level 2 that you're seeing here on the left-hand side of this screen is really, there's 29 by 30. I can tell you in January, those numbers would have been, you can add a zero. They'd be 340 by 180. There would be lots of liquidity. And there's just not a lot of liquidity on these bids. So you have to do, these futures are trading in about 100-point range. Typically they're 25.50. They're probably 100, 150 is where the real bid ask is. And so, but that's much better because it was 250. And I've been talking about that I've been talking about this liquidity factor, illiquidity, and then liquidity coming back, and then the spread starting to collapse. And that's basically just looking at the futures here. That's what we're talking about. So just kind of looking through, hang with me 1 second here. Yeah, so I'm just looking at some things. I want to set this up. So I'm going to go in and answering some of these questions that are coming in on the line. Because we're going to stick this to an hour. I want to be very disciplined about this so we can go on. I will. First thing I'm going to do is I am going to do an updated S&P forecast. I see there's some ideas. I will actually bring up Bitcoin. We'll talk about Bitcoin as well. I see some comments here. And I'll try to address some of these folks. I see there's several people on here saying that you're in cash and stuff like that. And yeah, and Mark's going, boring trading day. Yeah, it is compared to what we've been seeing. But in the old days, this would have been an unbelievable range. So, okay, let's go ahead and dig into the S&P here. And typically, I'm going to go a little deeper than I normally do on the normal chart. So this is a weekly. I'm going to change. We're going to look at the daily graph. One of the things that's happened, we're trading pretty much right at the 10 period moving average. We traded underneath it yesterday. We're down 3%. We've, 60% of that decline has been erased. But I still think there's this stair-stepping pattern. There's at least a 60% probability we're going to see somewhere around 2,700, 2,640. And I talked about this last night. Let me draw in a few things here, and I'll spend about 10 minutes going through this stuff. So let's take a look. This is the pattern I've been talking about where we got this ABC pattern. And I really think there's a little minor, there's 2 days down. I was telling you there's going to be 3 days down. So it may be a 3-2-3 pattern that's coming. What you folks don't know about me is I'm a bar counter. If I was in a casino, I would be banned from the casino because I would be a card counter. And I always look at these bars, and when I get into the intricate part of the markets, whether it's daily, weekly, monthly, an hourly chart, I'm going to go through some short-term charts here just in a few minutes. And all of this stuff is, to me, comes in these bar patterns. So we had a 9-day pattern up. All these things are almost perfect symmetry as far as what's going on here. So this little move up here, we could even come a little higher up, a little bit over 2,800. Still looks to me that we're going to come down with this next leg. The issue that I have with this idea is that this moving average I just drew the arrow up on is actually starting to accelerate. Down at the very bottom, I'll draw some arrows so you can see this. Down at the bottom, ppm 3 is actually clicked up. It's still negative 0.30, and I talked about this in the last 2 broadcasts that these averages are starting to flatten out, and that's actually a positive sign. The other thing that's happening is the 21 and 40 period moving averages are about to cross, and that's more bullish. I talked about the negative cross that happened on the 10 and the 40 just the other day. That's where we got the little reaction off the highs, and now we still should see this thing move down. And what will happen, this is what I'll be watching. So on the nightly broadcast, make sure you watch this stuff, is what I'll be talking about is what's happening with these PPMs, and is this momentum going to bleed off, or is it going to maintain to enough that the trends are going to be able to stay intact, or otherwise this underlying trend. So I'm not, one of the things you'll never see me doing a lot of is drawing trend lines. I'm not a big trend line person, but we basically went to the trend line. But the trend lines are, to me, are just not very useful because they're static lines and they're subjective because I draw them in. The reason why I use moving averages, the reason why these PPMs are on the screen, is it tells me about probabilities of what that line is going to do. So moving averages are trend lines, but they're dynamic, what I call dynamic trend lines, that give me the ability which to read what their probabilities are. Way back in the 80s, I'm an old dude, so back in the 80s, I worked with an associate of mine, and we wanted to determine when moving averages worked, when they didn't. Otherwise, when were they trend lines, whether it was up or down, and when were they going to be broken. And we spent a lot of time and developed an entire rule set and built a quantitative process around those rule sets over the years. And so all of this stuff is telling me that these moving averages are going to cross. This pattern is going to stay there. I'm going to clear this out, put some new lines on. I continue to argue that really what we're most likely going to see is this range where we get this ABCX, and everything should count in threes. There's not going to be any impulse waves. People that talking about this market's in a bull market, well, it's not right now. And the symmetry, these 2 moves that we've had here are very similar in distance. They're not in a structure of what's called an impulse wave. I'm an Elliottian, so I don't go into a lot of wave counting. I probably, as we go forward in the channel, I'll probably start bringing in some more of this stuff. And this is why I want to talk to you folks and just kind of be able to, without trying to edit down a video, I try to keep my videos under 15 minutes and try to target around 12 minutes. I know the attention span on the internet is, not real long. And, so I try to keep these things down pretty brief. But this platform that I'm trying to do now gives me an ability to unpack this a little further. But these patterns this is likely to continue in these threes, and there's a gap way down here. You can kind of see it with all the lines. That gap will most likely be filled. So what that means is there is right now still a very strong chance that we're going to go down and retest that 2190 low that we printed a number of weeks ago. I'm going to show you a couple more things here. Let's go over to the intermediate chart, just so you can look at the weeklies. And this is something I talked about the other night, but this is really, really good. And I do want to make some comments here that what I do, I'm not putting out specific buy and sells. What this channel is really about is giving this fundamental sentiment and technical overview. Most my clients are institutional clients, individual advisors. I see a couple of them that chimed in that are on the chat right now. I try to give perspective for them to talk to their clients. This is really this bigger perspective, and I haven't done. I'm looking at the markets. It's too early to make a longer term prediction, but it's really, there's more time necessary. So looking at this weekly graph, so far what we've had here is this big move down, and one of the things that's important to understand, so people talk about, well, the stock market's in a bull market. The fact that it's rallied 20% off the lows doesn't mean it's in a bull market. I don't know who came up with this term. I think somebody on CNBC. It always frustrates me when I go, well, the market's up 20% or down 20%, it's in a bear market. One of my associates and I did a study about 4 or 5 years ago, and the reality is there's only been a handful of markets that have been down more than 20% in a year. We were down 30% this year, and now we've bounced back, and now we're printing down around between 15 and 18%, waffling in this range. But this pattern here, there's several things to look at when you're looking at trends. And you've got this moving average, all of these moving averages are down, and these up here are going to probably accelerate on the downside, especially if we get back. This black line here is a 200-week moving average. We get back below that line, all of these are going to accelerate, but to the downside. So looking at PPM1, I want you to see the blue line and the green line are first and second derivatives of this line, and this downslope that we're seeing on all of these are down ticking and staying below that line right now present a very negative pattern. And just to clean this up, so I keep drawing this out, what we're seeing here, this is why I keep talking about what this will look like on the weekly charts. The daily chart was very complex, ABCX, ABC kind of sideways pattern. It should be a simple ABC here, and then I still think the next leg down is going to be substantially down. Now, I talked about the Fed a little bit ago. Maybe the Fed can engineer a bottom here. To be honest with you, I don't want to be right. I don't want to be anything. I want to follow the markets and look at what's going on as far as the trends go and how to protect assets. Now, most of our clients are in substantial amount of cash, and most of them got in cash somewhere up in these levels up here around 3,000, 3,700. So, I keep telling everybody just stay chill. What you're doing, even though the market's rebounded, had you stayed in, you'd be worse than than actually taking and going to cash. And so these patterns are way too early to be making a call and talking about the V bottom. It's just going to go straight up here. I just don't see that, not with these kind of numbers. We're looking at over here on the left, minus 0.205, minus 0.54, minus 14. And what that tells us is, for instance, on the minus 2.05, there's only a 20% probability for the S&P to finish above this level, and it's above it right now. I'll take this. I can't bring up certain metrics when I'm drawing on the page here, but what's happening is the downward pressure on the intermediate is still there. This You don't have a bull market with downward sloping intermediate moving averages. It's not how it works. Over here, all these moving averages were rising, right? Let me take this off. Let's expand this chart just a little bit. So let's take and look at a little bit bigger picture. Bear with me 1 second while I just bring in some more data. Let's go back. Let's go back 30 years, and then I'm going to dig into these questions here. Where are we at here? About a half hour in. So when this over here, this is the weekly moving average here, 200-week moving average, and it's still sloping up. So you could argue that this is the uptrend, but the strong part of the bull markets are upsloping moving averages, higher lows, higher highs. You guys know that you guys know the drill, right? So like during this period of time, going back to 16, this was a bull market. This was a bull market. Right now we've got and all the moving averages generally sloping up. All of these PPMs remaining in positive zones. Now, when you get this crush like this, now, are we going to get these stair-stepping trends? That's what it looks like. Those of you who follow me for years, I'm kind of like the guy that yelled wolf for the last 2 years. I've been talking about a generational high. Well, the folks that made the decisions to shut down the Western world economies may have just made me right, even though I was early in saying that we're going to get a generational high. It's going to be really tough, I think, opinion, for markets to be able to move into an all-time new high again with the with what's going on in the country and in the economy. I think it was the CEO of Delta. I saw a story that was posted this morning, an interview with him. He said it's going to take years. I saw somebody somewhere on the internet. It said it's going to. I think it was somebody from administration. It's going to take months to fix this. No, it's going to take. This is years. This is a systemic issue, and just like in 2008 and 9. It took years to fix that. It's going to take years. In fact, the mortgage-backed securities market, it took almost 4 years after it collapsed, and so the Fed, you could say they're ahead of this thing. They're putting up trillions of dollars. That's their favorite word now, to add trillions of dollars. But there's definitely a backstop in here. So the best possible thing that we can expect to see here is this consolidation. If we get a V bottom, hey, I'm an American. I'm all for the economy coming back and screaming and doing wonderful things. Okay, let's go to one more thing, and then I'll bounce off this, and I'm just going to do questions and try to unpack things. I won't get long-winded on this, but I think this is certainly important to understand as far as this stuff goes. One of the things we can take a look at, and this market, I think, is struggling up here. This is the hourly cash index. Let's just go to futures here. So you can see the futures are trading up. This is an hourly chart, 200-hour moving average. We're coming right into this number. We've dipped below it. These are similar patterns. So if you have the access to this platform that I'm using is TradeStation. You can probably see that on the screen. But this is the PPMs that are on here right now look very similar to the daily setup. So we're going to find out whether these things are going to cross. It's interesting because if you guys recall from just a few minutes ago, I was talking about how the 21 and 40 are about to cross. Well, the 21 hour and 40 hour are about to cross as well. So sometimes these intraday charts will give you an insight into what the short-term movements are likely to do. So, this was the decline we saw over the last 4 or 5 days here. Now we're seeing the retracement. We just started a new hour as we're speaking here. And I want you to notice that when the new hour started, ppm 1 actually, this down ticked here. Let me draw this in so you can see it. So this indicator right here, just on the update, just a minute ago, down ticked, and it's also taken out its first and second derivatives. Little slight downtick on this one, and these are all positive, so they're pretty good numbers. But there's a good chance we're going to head back to, the 27. We'll call it 27. 79, 77 level. We'll see if it can get through. But this is the kind of action that you see. The other thing, this momentum level where it's turning is much lower than what it did on this little pop that we had over here. All of these indicators are lagging. So let me explain something that there's been a lot of questions. This will be quick. ppm 1 is tracking this red line here is tracking let me clean this up. This red line down here is tracking the percent change of the 10 period moving average. This red line here tracks the blue line and tells you what the probabilities are when it crosses its first and second derivatives. This is the sign that you could see when the markets are about to make a turn. This is what I talked about. I think it was 3 weeks ago. One of the video headlines was "Market Signals a Bottom." This is what was going on, and so these are the patterns that's setting up. This kind of downtick that we just saw is probably pretty significant. Maybe I can come back to this at the end, but anyway, these are the kind of short-term things that you can see that I normally don't talk about on this stuff. All right, so let's hit on it. Let's get out of here. There was someone that asked last week on Tesla. Let's bring up Tesla. Hang on, let me get over to a daily chart on Tesla. And I'm going to do something else. I'm going to put one of our models on Tesla here really quick. I'm going to put, and you're going to see Tesla went long right here at 516 was a signal. This 10-day moving average is the magic mark. But you can see, I said this last night on a broadcast, but almost every chart you look at has the same configuration. So all the cash flow out and all the cash flow back in is mimicking each other as far as as far as what these patterns are doing. So once again, we're looking at tomorrow is the cross of the 2140. That's going to be support 592. We are seeing over here, you're seeing the ppm 1 downtick through its first derivative, and we're seeing ppm 2 kind of topped out. So Tesla is probably going to try to come back and fill this gap, probably head back to around 650, maybe all the way down to this 592, 600 level. But this is also, let's see, I'm going to be really as efficient as I can on this. But this is also the potential for, so this has a potential for the same kind of ABC pattern, but this one's much stronger. There's not a 5-way pattern here. If Tesla holds this line and makes a new high and prints up at 820, then there'd be a 5-way pattern. Then you could start to argue the lower high thing. As it stands right now, it looks to me it's still it's in an extended ABC without taking the time to figure out the exact numbers on here. you're looking at, let me draw this in. So you're looking at here, most likely is going to be a pattern like this. These moving averages are going to be going like this, and there can be a support. So Tesla's going to want to go back from that level. This high of yesterday's high is going to be a big number, especially since you had a little reversal down. And so this stock is pretty dynamic. You see our model bought it here, sold it over here. And that was a good trade. Did another good trade here. So it did on a daily basis. For the most part, these are all positive trades I'm marking out here off a short-term model. And so we've got a nice positive model. This thing is going to hang in there. We're looking at probably, if I brought up our modeling system, you're probably going to see that Tesla is probably a 37-day hold or so. So we're still probably mid-cycle in this thing. All right, let me see. Just going, I'm going to buzz around through a bunch of charts here. Let's bring up Bitcoin. Bitcoin here is on a daily. We did have a buy back here at 67.86 on Bitcoin. It bought at 73.08 and exited up here at 98.05 on that run. So, and I can turn shorts on, but for the most part, most people are doing Bitcoin, are utilizing, a long only type strategy with Coinbase or whoever you're doing things with. Okay, I just want to take this strategy off for right now. Let's take a look at the intermediate on Bitcoin, and what we're going to see is we're right on these moving averages. I want you to see that the PPM1 over here is down 3.9%, telling you there's less than a 10% chance to get above this level. We'll probably set up a right shoulder, come back in to these levels, maybe 6,200. I don't think it's going to get through this level here. And all the PPMs are pretty negative right now, which tells you, just like we were talking on markets, these trends are down. Everybody once upon a time thought Bitcoin was going to be this alternative asset that when the markets went down, they would go up. Well, it's pretty much a risk-on asset. It goes with the markets. It's been that's been the case for a while. What else do we have here? Just real quick, Mark asked the question, does the bulk market action take place during the night? Several videos ago, they all blend together to me since I do daily updates on a commentary, is I talked about there's two markets. There's an evening market and then there's the day market. And the day market probably makes more relevant sense. I've seen some huge moves in the evening markets with very little volume. The volume that we typically do, if I go over to the futures here, we're looking right now at about 1 million. And a good day, we've got a couple hours to go. You're going to do about 2 million contracts on there. During the night, you're doing 300,000, and you're seeing this amazing volatility movement. So I would put more action on the, or more, I guess, weight on the daily activity over the overnight, but because a lot of time the overnight will change. But if you want to trade, there's plenty of volatility to trade in the overnight session. So credit crisis. And I'll take a look at some of these airlines here in just a minute, folks. But the the credit crisis, at the moment, we're probably not going to see a credit crisis. The only dislocation that's seriously happening is in the CMBS, which is commercial mortgage-backed securities. Those things, Fed's not doing a lot there to help those guys. The multifamily folks are in big trouble. Several weeks ago, I did a podcast with my brother who's in that market, and you might want to go back and watch that podcast. It's worth a listen because most of that stuff is still happening, and that's where the dislocation's happening. I mentioned earlier that we're seeing activity by the Fed and the MBS markets. Basically, if you recall, the Fed did something which, I've been a Fed watcher for a better part of 35 years, and they did something that I've never seen happen before. They took off the reserve requirements of the banks. Basically, any money that you think you have in a bank, there's no reserve behind it, or there's no requirement to have reserves. And before it was a 10-to-1 leverage, so they could take $1 and turn it into $10. And now they can, I don't even know how to evaluate what they can do now, but they gave the banks the ability to do whatever they need to do to survive. So this is the extension. I don't even know what to call this. This is beyond QE. I've been around a long time when I've watched interest rates go from 20% to zero in my career. When I started in 1979 and 1980, early 1980, the short-term rates were at 20% on the Fed funds. If you can imagine that, they're like credit card debt, and the long-term bonds got to about 16.75%, and it was just it was just the flip inverse of what we've seen over the past several years, where we've seen these zero rates, and in Europe seen negative rates. It really is it's bizarre to see, especially going through the career and watching interest rates drop for the last 40 years, basically. So so anyway, as far as a credit crisis, probably not at the moment. I do expect that there's going to be a lot of issues with real estate. I made a comment a week ago or so that it's kind of hard to do real estate right now when you have to social distance. You can't even go look at someone's house, and the mortgage money's available, but it's really spotty. The jumbo loan market's shut down. But as far as the credit that we've seen in the past, there will be some of it. It's just it's too early to tell, because I've been talking about this. We just don't even know what's going on yet. We have no clue what's going on or what's broken. So in the next 8 weeks, we're going to have a better handle on exactly what things are going on. So let's trigger over here. Let's go over. Somebody's asking for Boeing. I looked at some of this last week. These companies are broken, and whenever you see something like this happen, you see and all the airlines look similar. So we'll go to at least one airline here, and take a look at that. But these guys are broken. They had they had the 737 Max issues, and then this happens, and but when you got a rally that went all the way to this all-time high, we came down, went flatline, and then you collapse this company all the way back. You turn the clock back to only 2016, but this pattern is likely a more compressed version, and this 10-period moving average that is just plummeting down is going to be the resistance point. So most of you should have access to that. I'd be very careful doing anything. If you were to try to buy a stock like this, you could actually put stops under these lows. Maybe it'd be a good idea to maybe buy some call options, but you're going to have resistance, up at some of these higher levels like 175, 180, but that's a good trade from here, right? 136. So there's opportunities here, but it's going to take a while for these type of stocks to actually get into the mode where we're going to see these uptrends. So my best bet is that Boeing will probably have a partner with the U.S. government, and so will some of the other airlines. Let's see here. Let's bring up Delta. This thing, yeah, I mean this one's not done yet. Okay, Delta is probably gonna maybe go to new lows. This is a pretty drastic uh, situation. If you look at the PPMs here, I was talking to somebody the other day, and we're looking at a PPM value of 9.93. Basically, the 10-period moving average, or this is weekly, the weekly moving average is dropping at 10% per week. I've never seen that number before. Okay, these are, this is historic what we're seeing here. So this is a tough one. This is like going back in the days in 2008 and just grabbing. I think Ford made it down to $1.50 at some stage. There's trades off of stocks like this. Are they going to go out of business? Probably not. Probably Delta, United, Southwest, and you go to all the majors. They're going to have the backing of the government. Some of these smaller providers, especially some of these luxury jet folks that I think Warren Buffett's invested in one of these things. That thing's probably going to go tits up. Who knows? Because all these high flyers, maybe they'll have the money to do it, but no one's flying around. There's no reason to go to anyone. Uh, there's this whole social distancing thing is maybe taking the old hand, the deal of us flying into a city just to see a client, to shake his hand and smile and have lunch or dinner with him. Maybe that stuff's going to be limited for a while. The media is sufficiently scared to crap out of all of us to be around other human beings, and so that's not good socially. We're social beings. This is going to be interesting to watch what happens after this. And I've been criticized, but I've said it a number of times that I believe this whole thing is a social experiment right now, and we're almost like mice in a cage to a point. So we'll see how things run. But this is a, a problem with these companies. They're probably not going to go out of business, but there are going to be lots of stressors. If you flash back to 2008, so we know the cruise line folks, the airlines. If you watch the video I did last night, the parking lot of airplanes just sitting there. Delta was one of the ones in that picture, and so it's just one of those things where it's kind of crazy to look at. So where are we at here? We got about 12 minutes here. Um, yeah, so yeah, I just saw a comment here. It's kind of interesting, uh, the milkshake theory. Um, in a world where there's nowhere to go but invest in the U.S. economy. Yeah. Listen, this is a most amazing country. I'm a proud American, and my argument has been is that the risk that these decisions have put us into place. I believe the medical community has been running the country. They operated on these bogus models that had millions of people dying. So if you're president of the United States, I don't care who you are, and somebody's telling you millions could die, I guess you do what you do. And then uh, everybody believed the models except for me, and it's all of these models have been wrong. There have been plenty of people dead, but I'm not sure the death reportings are completely accurate from what I've been able to read, but that doesn't matter. It was a serious illness. It wasn't to be disrespected, but these decisions, um, I've heard somebody say, the decision that was made is going to have 340 million people suffering because of the economy versus, taking a different strategy. I don't know if you folks, if you haven't, look up what Sweden did. It's very interesting, the theories behind the people in Sweden and their major, drug producing kind of. They've got some interesting biologists over there, but they didn't shut down the economy, and they did have some deaths, but they've got some real success here. So the point is, we're dealing with the shutdown, and the shutdown's not over yet. Every day that goes on, there's something else that's going to break. And my to contrast against what I said earlier is the Fed wasn't in crude oil. Look what happened. Let's put crude oil up here. Let's do that. Um, so it's up 23% today. Is that a bull market? No. Look at the trends. This is what I talked to you about earlier. These trends are all all the moving averages are down. This is not a bull market just because it's up 23% today or whatever it is. We're at $14. Well, if you think about it, we're trading $14 on crude oil. This is a disaster. There isn't anybody in West Texas that can make any money on crude oil, probably under 35 bucks. And I mentioned on a broadcast, and I talked to some people that I know, and they're saying that the real spot market sometimes is between $6 and $4. People are selling oil for whatever they can. There's nowhere to store it, and if you can't just turn off these wells because you have to plug them, and then when you bring them back online, they take even longer to bring back online than they did to shut down. But this kind of numbers is ppms. Here's 11.2. This is a weekly chart. Let's go to the daily so you can just get a view of that real quick. You can see this is the crazy. We printed out at 6.5. I mentioned on the broadcast last night that was probably a climactic low. It didn't belong at 6.5. That was the best buy in crude you're ever going to be. If you guys remember, Southwest Airlines was famous in 2009 of when crude was down the last time at buying like 4 years supply. They bought up a bunch of cheap oil. The U.S. government is buying oil primarily to support our oil industry, but they're stockpiling this stuff. What a great time to stockpile it. Buy low, sell high. So this is really, really good stuff. Um, Really good stuff. If you're a user of petroleum, and these cheap prices probably also going back to the Tesla. Tesla's like an interesting car. I'm in Arizona, especially in Scottsdale. You wouldn't believe all the Teslas on the road around in Arizona because it doesn't snow, so you don't have to worry about all that stuff. And there's a lot of them. It's very trendy to have a Tesla. And Phoenix is a nuclear-powered city. It's not a coal-burning city. So a lot of cities and people using Teslas are still not green because they're burning, their coal or natural gas-powered facilities that are filling their tank, so to speak. And so anyway, let's see here. Any last questions here? Somebody asked, do you think the market will start to discount or ignore stimulus? That's very possible, and that's what I was trying to reference earlier on, is that we have, it's the Fed works until it doesn't. We believe in the Fed until we don't believe, and those are the kind of sentiment psychology in the markets that set up. Now it's like the mortgage story I just kind of touched on a little bit ago. The second the Fed steps out of these markets, they're back to selling. The prices are back to selling off, and it's the same. It's the same thing here as far as especially in the bonds. One of the things we didn't touch on, and I said I would, is looking at the 10-year. I just want to touch on that. I still think what you're looking at here is the low in yields, and let me pull this over here a little bit. And I strongly, everything's telling me based on PPMs turning up, all these PPMs are starting have got a bottoming formation of some sort. Let me show you. This is pretty much kind of a classic pattern. This thing should start to come out of this pattern. It's possible to go to 150, but there's still a lot of downward pressure, but it's starting to dissipate. That's why these PPMs look like they do here. This one, the PPM 3 is actually penetrated through its first derivative, and this is the classic pattern, which tells you that's for this average. This average is going to absolutely flatten off, which tells you that it's going to be penetratable and that you're going to see a trend change, which means interest rates are going to go higher. Now, what that equates into, does that equate into lower markets? Does that equate into what you're asking here? Is they're going to start, ignoring these things? That's hard. It's hard to tell right now because that's just an off-the-cuff prediction or guess. But these patterns are saying that ultimately rates will come back. Will at least challenge as high, which doesn't sound like much, as 1.2, but most likely we're going to start to work in some kind of upward sloping pattern. If this thing gets out of control, if the Fed loses control and people start selling securities and they do get freaked out, then you could easily see this thing skyrocket to 3%, and then it makes the debt, all the trillions of dollars being spent, amazing. Just one real quick comment I want to make on all this stimulus money out there. By the way, very little of it is in the hands of individual business owners right now. This, was it PPP, is not, it's going through the SBA, and what's happening is that the banks that are SBA lending banks are putting their capital out, and as long as the borrower can show that he used the money for payroll, then the Fed on the back end will take on that debt. But if there's going to be a certain amount of people, if they don't do the right things, there's going to be a certain amount, we'll call them defaults, that those loans aren't going to be guaranteed. And all of the liquidity in the banking system right now is, in the note of billions and $300 billion is being sucked out of the banking system to go to these loans. And meanwhile, it's so complicated. If any of you on this line have ever tried to get an SBA loan, you know the paperwork in this thing is still crazy. These guys only do like tens of thousands of loans every year. Now they're doing 22 million. So this thing is really, really out of control. So let me just see. We're getting close to an hour here. Let me look at. Okay, yeah, got to do it. I think Mario said got to do Apple, right? Let's take a look at Apple. So this is daily Apple, and same pattern like I've been pointing out. Every one of these, I have this 2140 cross happening. This off the high, this is a perfect ABC. We're probably going to see it back at 255 maybe. Might be able to go a little higher. This does not look like a pattern that wants to stair step, but this will be several days before we'll be able to see it. But let's take a look at the weekly graph very quickly. See, it's very similar. We've actually went up to the 21. Let's do something here real quick. Let's put some Fibonacci stuff on there. Let's just look at retracement values really quick here. Let's grab these prices and just take a look at where this is. And just going to grab this area here so you can see what's going on here. We basically have done a 6.18 retracement. Most likely what's going to happen on Apple it will work these values within the moving average as well as the Fibonacci relationship of this decline. And so we'll take a look at this here real quick. So yeah, so here's the pattern. This is a weekly, okay? Here's the pattern. It's probably going to, we've got this uptick, but there's probably going to be some move back to this 40 period moving average, which is roughly 256. Maybe a bounce up, and I think all these lines here, all these Fibonacci relationships are going to control and maintain what this market's going to do. Is everybody going out and buy new iPhones? Probably not. You know, um, probability of this V bottom and just the way it's acting. Let me convert this chart back to a daily real quick here. So you'll see these relationships right here, same numbers, but you can see the structure of the market. So a lot of things that I look at are important to me is what the structure of the market is, and that's because of Elliott wave environment. That is key. One of the things that is pretty obvious here, and I'll draw this in, and this is the concern for longer term, is that we're looking at after this big run up here. This is probably a top. This is probably 1, 2. This is probably probably a 5-wave sequence down, A, B, C, and then maybe a 5-wave down. Maybe we make a new low. I can't get to the actual value at the moment because I'm drawing on this page. This could be the structure, or it could actually end up being the same structure as I discussed in the S&P. Most likely, that's going to be what happens there is we get this A, B, C, and then we get this pattern here. Oops. And then, you just kind of get this trading range. I think everything gets locked in a trading range because it makes sense if you think about it, is that everything's going to be locked in this range until we know more about what's going on in the crisis. Just looking at last couple things here in the comment line. And then we'll call it quits here. We're right on the hour. Anybody got a burning desire or anything that I didn't carry? Yeah, I see one guy said he works at O'Hare. Insane how many planes are sitting, hundreds exactly. Yeah, it's really scary. I mean, man, it'd be great. Hey, Nick, if you're still on, if you get this, be great to send some pictures to me. My email's on the Kendall report on the website. You can email if you got any pictures of that stuff. It'd be amazing to see. Anyway, yeah, I think I see a comment here. Markets supported by the faith in the Fed. What would be examples of events that would shake the investor's faith? I've been talking about these oh shit moments, things that you didn't think were going to break. I mentioned the retailers. A lot of these retailers are going to disappear. As a matter of fact, we didn't put Amazon on, so I'm going to go for another minute here, and let's put Amazon up here. I've actually gotten to hate them. You actually can't get anything. Prime's a joke. I want to, other than watching movies on Prime. Amazon's pretty much worthless when you look at their Prime deliveries. They're giving you 2-week deliveries. I get that they're overwhelmed, and they're probably the only thing working. But this pattern here is just what it is. It's obviously very bullish. This is what everyone thinks it's going to look like. This is the V bottom, right? And this will be. I'm gonna finish here. But this is the V right here. That's your V. And if we break it down, we can look at this thing here. This is a 1, 2. This is definitely a wave 3. This is wave 4. And there's another wave up. So this thing is probably not done. And this tells you also maybe I'll draw some conclusions. One thing I talk about doing reverse fundamentals. And that tells you that, you know, Amazon's going to be our main provider for a lot of goods here for a little bit. They're going to continue. And this trend is likely to continue. This is the opposite of everything else. Plus 1.65, plus 1.09 ppm2, ppm3, 0.51. So if you're still watching a video, make sure you watch my video on understanding ppms, but I've really unpacked a lot today. I really appreciate all the folks that are watching. I think we had probably 100, 120 concurrent views, and I know we'll get a couple thousand more after this fact. But anyway, I really want to thank you all, and just you know, tell your friends about what we're doing, because there's going to be some other types of content that come out to be educational and start to show you folks how to make better decisions in the markets ultimately. So hang around, tell your friends. Really appreciate it. Thanks again for watching.